Welcome to SBI Securities weekly market podcast. Today we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. I will also be discussing on key sectors and stocks that could make a move from here on in the coming week. In the week gone by, we witnessed Nifty breakout above its resistance of 19,850 and closing at a new lifetime high, up 2.4% for the week, above 20,250 levels. Bank Nifty also followed Nifty and closed up 2.4% above 44,800 at its highest level post 22nd September. The real traction was seen in the broader markets with both the Nifty small cap and mid cap index gaining 3.4% each for the week. Coming to the macro factors, the US 10-year bond yields and the dollar index are trading weak on a weak footing at levels of 4.3 and 103.5 respectively. This indicates the continuation of liquidity flows towards risk-on asset classes like equity markets, both global and Indian. However, one should have a close eye on Brent crude prices, which have inched up towards levels of $83.5 a barrel. A quick check on the global markets. The overall trend for the US markets has also been extremely bullish, with the S&P 500 witnessing a breakout above its resistance of 4,530, 4,580 on Friday and is currently quoting at levels of 4,594. The index can gradually move towards levels of 4,710, 4,740 in the near term. Coming to the rollover data, rollover for index futures were lower at 73.06. If we see the previous rollover was at 83.39, and even if we see the 3 months average, that was at 77.48. The rollover cost was on the higher side, that is at 0.7 as compared to 3 and 6 month averages of 0.63 and 0.69, mainly on account of lower rollover. A probable reason for these lower rolls and the higher cost could be the current rally was mainly on account of short covering in the market. Post a strong bullish move in the past few sessions, going forward 20,050, 20,100 will act as a strong support, and till the time this zone holds, index can continue its rally towards the higher levels of 20,600, 20,650. On the downside, below 20,050, index can retest the support levels placed at 19,920, 19,950 zone, followed by 19,800 on the downside. Coming to the OI data, significant call writing is witnessed in 20,300, 20,400 and the 20,500 strikes, while on the put front 20,200, 20,000 witnessed considerable open interest addition. Overall, the range from a short-term perspective could be 19,950, 20,000 levels on the downside and 20,450, 20,550 on the upside. Coming to India VIX, so India VIX ended at levels of 12.5 with a gain of nearly 6.3% in the month of November. It has given the highest monthly closing since April 23. Going ahead, any sustainable move above the levels of 14.5 will lead to a sharp rally up to the levels of 17.5, 19 in the short term, while on the downside the zone of 9.59 will act as the immediate support for India VIX. Now coming to the key levels for Bank Nifty. Coming to the rollover data first. So the rollover data for Bank Nifty were higher at 80.29 as compared to the prior month of 79.31. But below its 3 month average of 81.7%. The rollover cost was at 0.61, much lower than the 3 and 6 month average of 0.69 and 0.65 respectively, indicating still some short positions remaining in the system. Immediate support for Bank Nifty is likely to be the zone of 44,200, 44,300, where the 100 SMA is placed, and till 44,200 holds, the index can manage a rebound up to the levels of 45,450, 45,580 zone, where resistance will be witnessed. A surge above the levels of 45,600, index can witness further short covering up to the levels of 46,250, 46,400. While on the downside, in case 44,300 breaks, index can retest its support placed at 43,800, 43,600 mark. For the next weekly expiry, significant open interest build-up was witnessed in 44,700 and 44,500 puts, and on the call side it was mainly seen closer to levels of 44,900, 45,000 calls, implying a near-term broad range of 44,100 and 45,200 for the bank index. Coming to stocks and sectors that are currently in momentum. So based on the rollover data as well as the chart setup, so you see that the financial services, that is NBFC and insurance companies, pharma, cement, mid-cap IT, oil and gas, auto, infrastructure, these sectors could do well. While coming to stock specific moves, let us discuss few stocks where the setup is bullish. So as well as the derivative data is supporting the current chart structure. We are witnessing good momentum in select banking stocks, especially from the large cap space, the likes of Axis Bank and ICICI Bank, while from the PSU banking space, Canara Bank, Bank of Baroda and Bank India witnessed decent short covering, and we expect this short covering move to extend in the coming week too. Momentum was also visible in capital good names such as LT, Cummins, Siemens, BHEL, and power names such as Tata Power, NTPC, and we feel the strength and the momentum could continue in the coming week as well. With the dollar index having stabilized at lower levels of 103.5, metal stocks saw bullish moves with the likes of JSW Steel, JSPL, Tata Steel and Hindalco leading the way on the upside. Cement names such as Dalmia Bharat, Ultratech Cement and Ambuja Cement saw decent build up on the long side. From the broader market, bullish setup was observed in the likes of Bajaj Finserv, Sun Pharma, Indigo, HAL, BEL, Dalmia Bharat, Concor, Astral and Bharat Forge. Coming to the FI DI data, in the cash segment both FIs and DIs bought to the tune of 1589 and 1488 crores for 1448 crores respectively. This is the fifth day in a row where the FIs have bought in the cash segment. FI's long short ratio for index futures has recovered to 38% as they added almost 9,800 index futures net long on Friday. On the stock futures front, FIs have bought to the tune of 63,900 contracts, while on the options front, FI shorted 1,09,000 call contracts and shorted 73,000 put option contracts. Just to summarize, key support for Nifty for the next few days will be the level of 20,050, 20,100 and resistance is seen at 20,480, 20,550 levels. For Bank Nifty, the key support would be 44,250, 44,350 zone and resistance will be around 45,350, 45,500. That's all for this week's episode of SBI Securities Weekly Market Pulse. Wishing you all an excellent weekend ahead. We hope you enjoyed listening to our podcast and are finding it useful for your trading decisions. Kindly do subscribe to the channel for such updates and interesting insights, and also do share it with your friends and relatives. Until we meet next week, happy trading and stay safe. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.